Welcome to Whiteboard Wednesdays, real talk with a realtor. I'm Sharice Wynn, also known as the Agent Lady. And today we have Megan Byrne from Finance America, and she's going to talk to us about conventional loans. Woohoo! Welcome, Megan.
Hi, thanks for having me.
Absolutely. So let's dive in. Conventional loans, I see this 100% financing. You want to tell us more just about conventional loans in general and
Absolutely.
why people choose them?
So, generally we know there's two different types of loan options, FHA and conventional, when you're looking for homes.
Right.
So, some of the cool things about conventional loans is that you have some special programs in Philly and Pennsylvania in general
Okay.
that allow us up to 100% combined financing.
Wow.
A couple key points are going to be income limits there.
Okay.
But realistically, that allows for more affordability when you're purchasing a house.
That's pretty awesome. Just so people can get an idea of affordability, what does that look like in a 100% financing situation?
If we're looking at 100% financing, one of the options that you can do is as little as 3% down, no monthly mortgage insurance. Key points that we want to keep in mind, if we've got 2 or less people in the household, keeping that income right around $99,000 and less is going to be important. And if we've got 2 or more or 3 or more, then we're looking at $116,000 as our max.
Okay, so in essence, just call you for the numbers.
Absolutely. We'll work them up.
There's a lot of numbers involved. And then 2, new loan limits. What's that about?
So loan limits are increasing next year. That really just allows homeownership to be way more affordable. As you know, our market is jumping up like crazy right now.
It is.
So it's something we've got to be able to make sure we have the changes for it too.
Right.
So one of the things with a conventional loan is that it allows up to $453,100.
Wow, that's amazing.
That's going to be your mortgage limit for 2018 going forward.
That's awesome.
This came up from $424,000 last year.
Right.
And it's much higher than FHA. FHA is right around $382,250 for next year.
Gotcha.
So that means you can do up to $467,000 with as little as 3% down.
Okay.
And you can even look at options that have either no monthly mortgage insurance or have it financed into the interest rate, doing something like an LPMI loan.
Okay. Yeah, I might talk to you about the LPMI later. Because I see a word on here that everybody wants the over. Student loans. Boo.
Everyone's got them, right?
Yes.
I mean, we have to be honest, especially within this day and age, having that college experience is extremely important to get jobs.
Absolutely.
So keeping in mind, student loans and the cost of going to education has increased.
Right.
So I think one of the cool things that conventional loan products are doing is just allowing us to factor in student loan payments much better to qualify. Okay. So one of the cool things with conventional loans is that if you're on an income-based repayment plan or graduated repayment plans, we can use that to qualify for a mortgage.
Okay.
FHA has a little bit more restrictions. They want us to use at least 1% of the outstanding balance. Who's paying that on a monthly basis?
No one.
So I think that makes a huge difference in what you can qualify and what you can afford for a home.
Yeah.
So it's huge.
It is huge. So conventional sounds like it could be the way to go for some people out there. It really just depends. Megan, you were awesome. Thank you so much for coming. And how do we find you?
So if you ever need to reach out to me, you can always give me a call directly at 267-685-6965. And you can reach me on the web at foamortgage.com/mbyrne.
All right. Or you can contact me and I can have you follow her.
We'll make sure that you get in touch.
Exactly. Well, guys, that pretty much sums it up. Remember, friends don't let friends buy or sell real estate without the agent lady. Make it a great day.